Welcome, Tiero from ARK, the CEO and founder of ARK. This is a part of Store Bitcoin podcast, although in a different shape and form because some technical issue, but we'll try to make it look and sound better. A big background about Tiero is computer science graduate, if I'm not wrong, from a place in Italy close to where I grew up. So I've been knowing for many years. In different scenario situation, we're not going to remember, but that's how sometimes the world is smaller than we think. And so then after the meetups we had in this part of Italy many years ago, then I knew he was moving outside of Europe. Then I didn't see him for a while. Then all of a sudden I met him in Lugano again and say, "What are you doing?" I say, I'm building ARK." I say, "Oh, I'm building BitVault." So two startups. And last time I saw him, I told him, we are building the best startup for Bitcoin payment. We are building the best one for Bitcoin as a store of value. So this is just appetizer, and welcome, Tiero, to our
Thank you.
show. Do you have anything to add about this brief introduction? Do you want to introduce yourself a bit better or share some background story of your career with our listeners?
Sure. And yeah, thank you so much for not spill all the beans. So if my mom doesn't know what happened in the past, no, I'm joking. So yeah, as Francesco was saying, yeah, I moved my first steps in 2014. Was my first startup where basically it was offering Bitcoin for cash brokerage in a town in north of Italy. Then also one of the first Bitcoin ATM in Italy. Also, we and other colleagues we put there. So we're like in a way creating a nice yearly circular economy. So there were like 20 shops accepting Bitcoin in a time where hardly we could call Bitcoin an industry. Fast forward today, I've always been working in the Bitcoin space. And in 2020, I came back to work with my company, Vulcan Ventures, on a lot of R&D items. I focus a lot on the Liquid network, which is the sidechain from Blockstream. And I've been learning and my team and experimenting a lot with what they're called Bitcoin covenants, since Liquid is basically a clone of Bitcoin as a blockchain, but at the same time has more programmability and more aspect. And in a way, like ARK is born in this pool of innovation and research. But just last year, when we figure out, it was very interesting to and was very practical to make ARK work on Bitcoin with no soft fork and no changes. Then when we decided to spin off and move all our entire team and focus for the next decade in building solution on top of ARK, which in the end just to increase the adoption of Bitcoin in many more aspects than already is not doing.
Yes, I remember the first presentation of ARC at the Tuscany Summit 2 years ago. I wasn't there, but I watched it online, and it was clear to me it was something like breakthrough because the claim was that it would have solved the scalability of Lightning Network problem, and I was thinking that it was great, but then I could only see the payment use case because I say Lightning is just for payment. Then after now in the last year, I started to understand that it's also enable programmable Bitcoin applications, as you say, without requiring fork. And I managed to get a bit more familiar with the VTXO concept. And if you can expand more on how does ARK enable programmable Bitcoin application and without the soft forks, and what makes the VTXO so different from the Lightning channels we are used to?
Sure. I think it's a good angle indeed. And just I go back from my early days where, I was used to meet people that were not technologists, but they were used to buy Bitcoin from me. And they were coming to me with like multi-sigs, escrow. So in a way, Bitcoin always been programmable. Bitcoin has a full script way, has a full way to express spending condition from the early days in many ways. But the use cases, the application are in a way limited by block space and block time, right? So most of, let's say, contract flow usually require 2 or 3 transactions. And as you can imagine, in the early days, everyone was using escrow, everybody was doing peer-to-peer trading way more than today. But in 2017, 18, when the mempool congestion spiked, all those startups, all those businesses stopped using the Bitcoin blockchain as much as possible because they were scared that basically, this block space and block time constraint actually doesn't offer a good platform for you to execute contract. So fast forward to today, like we're not really doing anything different than that, but just by the fact that we can lift any type of Bitcoin transaction and make it virtual in a way without requiring you to get in the next block and without requiring you right, to pay the cost of the mempool, the fee bidding that happens in the mempool. I think that really changed the dynamic in many ways. I may always make an example. For example, one of the best startup which I really love, which is Bolts. They use the Bitcoin blockchain and other like Liquid, Roosted, and etc. to basically to execute what we call hash locks, basically HTLC, right? So in a way, you use those constructs, which also Lightning use under the hood, to basically make atomic swaps of Bitcoin between layers. And last year, or no, 2 years ago, when Ordinal Craze came out, they had to shut down their business for an entire day because they couldn't process swap anymore because the mempool was so congested that literally they had to shut down their business. And for many businesses, not about, well, I'm okay to pay, for example, a fee, let's say subscription fee every month, but when I want to settle, I want to have predictability of my fee. So it's not only about scalability per se, but it's most importantly having like a way to settle contract in a timely manner and in a predictable way. So in a way, like what's really the beauty of doing this thing off chain without having a different paradigm, but retaining the pre-signed transaction approach, the same UTXO model, you actually retain the same use cases that Bitcoin already allow you, but the scalability doesn't really makes compelling or appealing in a way. And this is very interesting because like we can really bring back all those peer-to-peer lending, peer-to-peer escrow trading from the early days and do it in a way better way. Because in a way, like Lightning is a subset of use cases. Lightning really make you send or receive money. That's it. You cannot do more than that, right? Even escrow, they're like kind of on a hack, right? They hold an invoice and stuff like that. So in a way, like we got used to the fact that like, oh, Bitcoin, you cannot do anything with Bitcoin because even the most famous layer 2 of Bitcoin Lightning, it even shrink and reduce the use cases that you are able to do on the base layer. And I think that has been for me the most interesting aspect of ARK as a protocol because retain the UTXO concept, it retain the scripting capability on the off-chain layer, so you can really port almost one-on-one any type of business you can do on Bitcoin blockchain, but you can do it off-chain in a better way.
Yes, so the first use case you are focusing on today is going to be the financial layer, of course. I mean, because we start Bitcoin, you mentioned the escrow and other use cases where you have a competitive advantage because nobody is able with this to the current technology to deliver anything. But there are also different players rising right now. There's the Spark chain, which to somewhat can be defined as your bit of your competitors. And but I know you have a big advantages. You mentioned before the unilateral exit. So if you have to like L5, the concept of how the VTXO works in a high-level way, in a way which can be understood by our audience, and what's the competitive advantage you have on the other layer 2s like Spark, for instance?
Yeah, so I think the most important thing to have in mind is like what really ARK is a technique. And I would say it's a compression technique. That's it. Then what you're gonna do, what you're gonna build, that's really matters. That really you have to be really intentional, right, on the type of layer 2 you wanna build, and that's why one of our the name of our commercial layer 2 that we're going to market called Arcade has its own vision and opinionated way to leverage this capability of basically compress many of Bitcoin transaction in a single, many virtual Bitcoin transaction in a single Bitcoin transaction. So in a way, like you always keep a single on-chain transaction, which we can call settlement, right? On-chain settlement. So it gives you this capability to batch thousands of virtual transactions in a single output, in a single transaction. And I think that's a very interesting use case, and I think many exchange already use transaction batching, but they use to assign one real physical UTXO, one single output to every customer, to every user that is basically receiving payment. Instead, the beauty of here is like, well, we can always consume a single output and nest in that output, and again, batch multiple, let's say, transaction using a tree structure, right? And the idea is like this tree structure basically give you the capability to you independently without cooperation. After we complete the signing session to create this batch, after that moment, your wallet holds a pre-signed path, let's say multiple transaction, that basically allow you in any time, any point of time to get out and get your real UTXO, right? But the goal is like to have an operator that like the economic incentive makes so that we don't want to exit. We don't want to get out of these batches as soon as possible. And I think that the other interesting concept is like, well, from these virtual UTXO that are basically anchor in this Bitcoin transaction, we can attach normal full-fledged transaction, right? We can attach this thing and create real VTXO, virtual UTXO chain of transaction. And this is what really makes programmable, right? So then we can have a concept we call virtual mempool, which basically allow us to really attach 2, 3, 4, 5, 6 chain all of this transaction without ever every time to hit the blockchain again. This method of attaching this transaction is what gives you a pre-confirmation, right? Which is the goal that for you, your wallet, your user to then wait for the next block and then the next block to do again with this transaction batching process. So then we settle this pre-confirmed balance and made those balance confirm. I think in general, like beside the technical aspect, I think the real value I see, and I think like you mentioned Spark and all other state chain actually give you unilateral exit. You actually have a transaction that allow you to go to the blockchain and get out. Point is like if you want to have Bitcoin finality, and that's what I think the interesting aspect we're doing with Arcade is like you can get Bitcoin finality, you can inherit the Bitcoin censorship resistant characteristic without exiting from the system. You still own a VTXO, just that VTXO goes from a pre-confirmed state to a full-fledged Bitcoin final virtual UTXO, so you don't need to have a UTXO to get Bitcoin finality. Whereas in state chain approach, every time you want to get Bitcoin finality, you need to get out, right? So the incentive are in a way a bit blurred because why you want to get out and undo all the scalability properties of the layer to get real Bitcoin finality. So in a way, I think like every solution has its own perks and this is on advantages. For sure, I think the other aspect, which I think ARK is way more similar than Lightning. People, I think, conflate too much to Lightning, but I think Lightning is way different than what ARK is supposed to work. And I think rollups and BTVM based approach are way more similar because you have a sequencer that basically sequences this transaction off chain, and then you get finality. Let's say I think most rollups in Ethereum you get finality in 12 hours. something like that. The beauty of here is like you get finality to the next block. And that's, I think, the game changer and the value proposition compared to any other rollups in a way. And it doesn't require a soft fork, first of all. It doesn't require, a new cryptography, right? There is no new math assumption with this. There is literally just taproot, music, PSBT. That's it, right? So it's literally like old technology that everybody we can come around, we can agree that is stable and is safe and has been like 10 years in research. So in a way, like ARK is really like a taproot first application, and in a way doesn't introduce any new type of cryptography or mathematics. So it's very easy to understand. So just to answer to your question, what's the unfair advantage that you see? And of course, like as a startup, you always think about this, but I really think that in the end, if you want to have the best form possible of Bitcoin finality, I think that's a system that brings you natively Bitcoin, so you're not in a different EVM setup. You're still using UTXO, so you're still using the concept of ownership that UTXO really expressed very well for user, and then you use very basic Bitcoin technology. You don't use any fancy thing that is maybe unproven or very hard to grasp. It's very just pre-signed transaction, taproot, music, PSBT.
So it's very clear. Let me introduce our host, John. I don't know if he has any question at this point.
Yeah.
Or,
So Tiero. So I'm not as technical as Francesco. So help me wrap my head around this, because I listened to earlier podcast with you and Stephen Lavera, and you also mentioned that like a VTXO can expire, and like who is and I think when it expires, and please tell me if I'm wrong, but I think that I should give like my on-chain address to where the UTXO can be sent if the VTXO expires. And if that's the case, like who is doing this
Yep.
for me?
How this process? Yes. Yep.
Yeah.
Yep. No,
So
it's a
is the wallet software doing providing this for me, or should I before I sign up with the wallet, or not sign up, but before I activate my wallet, should I yeah pre I don't know. I don't know if I should already have a wallet where the UTXO can be sent to. I don't know. Please explain.
Yep, yep, no, absolutely. I think maybe that was very one of the early days, maybe 2 years ago or like 1 year and a half ago. So in a way, like there's been like a lot of let's say advancement, to put it mildly, since the early days of the concept and review. But I think like yes, that's a very good important point. So all these batches, right, that basically commit, where all these batches are, all these virtual UTXO committed, they have an expiration, and this definitely introduce a liveness requirement, right, to the user, because they need to come back in a way and renew this, because they need to hop. And I think this has been one of the major breakthrough of ARK, like how we can, okay, we are nested in this batch, how we can hop to another batch in an atomic way without me, the operator, or someone else being able to, to be in charge of the money, right? This process has to happen trustless as possible, or at least like with the right incentive for us to happen. And you will learn about connector output and et cetera, et cetera. But the point is very, like, many see, you may see this as a bug, but actually I think is a feature, because in a way, like, you need to, whenever you introduce liquidity, because these batches you have external liquidity provider that are providing the liquidity for optimization, you need in a way to pay for your liquidity. And I mean, there is a way, there must be a way for you to always go back and pay for your liquidity, very much like our end, right? So, because what you're trading off, you're saying, well, I don't have, the mempool is too congested, the Bitcoin blockchain doesn't work for my use cases, right? So again, remember about the concept not as an ownership, because I think if you want to own money, cold storage, I think UTXO is where you want to go, full stop. And I think if you don't have enough money to afford an entire UTXO, I think that's the Bitcoin is not like fair for everyone, right? So cold storage, cold custody, and et cetera, UTXO is where you want to be. Now, if we move the shift to thinking about, well, we can use Bitcoin as a platform to execute contracts, right? So it can be an escrow, it can be a swap, it can be all of these things, and where like a blockchain will be an overkill, right? Well, if you start thinking about this, you say, well, this contract, they in a way, they assume that the user of this contract, think about a loan, think about an escrow, they're actually pretty live. They will come back because then they want to progress the contract state from a state 0 to a state 1, right, as much as possible. So in a way, this expiration forces the system to have an operator to be online, to provide liquidity, to remove all the complexity of the off-chain scaling, as we know from lining and liquidity management and channel management. But at the same time, it forces the user to have the right incentive to pay for their rent. So you cannot just like free ride, the liquidity of someone else. So I think this is very important. I think that's really part of the system. I think what we progress so far is in the end is you don't really need to be aware as a user. A wallet provider for you can be what we call a delegate, right? So you can delegate a trusted third party, which can be, not trusted, right? So untrusted third party, which basically can actually renew for you and pay the rent on your behalf. Or maybe you have a piece of software at your home, which is very simple. It just wakes up every month and just does this renewal for you, and then it can go sleep again. It doesn't need to be online. It is not needed to be online to receive a payment, etc., etc. So in a way, yes, there is this VTXO expiration, which definitely is, I would say, the most peculiar thing of the system. But seeing from the bigger picture is actually how we make liquidity allocated in an efficient way, because only people that are paying for the liquidity are the ones that are contributing and coming up. And there is no other way to have liveness if you want to be self-sovereign. Otherwise, it means someone else has a credit and you are pulling money from your credit account in a way. So I think this is like how more or less work and why an expiration exists.
Yeah. Okay. Thank you. Thank you.
Thank you. That's very clear. What about the security of this process on the UTXO mempool, or you also have the ARK nodes, which maybe are not nodes, I don't remember the name, but I understand then you say better. And what about the coordination of this procedure? Who can guarantee that is going to be secure? And are there the degrees of security within this procedure? I am into your chat. I remember somebody clearly explained that you need to wait for a full round of coordination to have a secure finality. What's the catch there? Is a time based? There is a number of how the coordination happens to be secure way, and can the user choose how much security he wants in your system?
Yep, absolutely. So I think in general, like the main difference here is like, well, not really different, because even in the normal Bitcoin mempool, you have a concept of like a transaction that is like broadcasted, right? But is unconfirmed, right? And we knew even before many years, many payment processors were relying on the fact that there are many trust incentive for them to accept unconfirmed transaction, just like they start looking at the mempool and they accept for a payment for many reasons, right? So you're on a restaurant, like you are not going to go to a miner to double spend, because tomorrow you will show up your face, right? And this is the equivalent to just basically walk away from the restaurant without paying, right? So in a way, like I think we are trying to not to be very prescriptive, right? So we don't want to be like, oh, don't trust anybody, but like we want to let businesses, payment processors, and startup like to say, well, you have been working very well with unconfirmed transaction in the mempool. You should be able to do the same in the virtual mempool, which is even better trust assumption, because every transaction, so when I was explaining before, right? So you can attach to a VTXO that is basically committed in a batch. You can attach transaction and you can send them in the same way you do with Bitcoin transaction, right? So you create an output, you spend that output, you can, right, and create this kind of, a graph almost in the mempool. And what we give you is basically a pre-confirmation, right? So the operator is taking your transaction, is validating that all the Bitcoin script that you are running is correct. And then it will just add a signature that basically will give you a full valid pre-signed Bitcoin transaction that in case of the operator going offline, even with a pre-confirmed VTXO, you can actually go on the chain and exit, right? So if just the operator is offline, you can still get your money because you actually get real Bitcoin transaction. Your wallet, you don't need to trust anybody because your wallet, the moment, as part of this pre-signed process, is actually storing this pre-signed transaction. So you don't need to trust anybody, just, the basic of taproot and transaction. Now, there is a moment in time where like actually these transactions pre-confirmed are not settled yet, right? So they're not actually in a new Bitcoin batch, giving, as I said before, full Bitcoin finality. And in a way, what really is the risk here is the operator with your previous sender will basically collude in a target attack to double spend you, right? And this is a very strong commitment. First, because the signature of the operator will be public, and everybody will see this double spend, which means that all the batches that are actually final and are ready in blockchain, everybody will basically exit, right? So in a way, like doing that is kind of nuclear bomb, right? So like you basically target attack one single payment or one single transaction, but then everybody will exit from their own batches unilaterally, and that's I think a very strong incentive for him because he actually adding a signature to create this VTXO chain in the virtual mempool. So the pre-confirmation, I think, is very valuable for payment processor, businesses, peer-to-peer land, etc. Right? So startups, they actually have better tool than us as a user to evaluate risk. They know payment processor. They know. I mean, it's a $5 payment. I can definitely accept a pre-confirmation, right? So I don't actually need self-sovereign Bitcoin finality guarantee because like it's 5 is enough. It guarantee me that I can exit in case of liveness failure of the operator, but in a way the operator has to actually actively collude for me to double spend that pre-confirmation. I think the beauty here is like you as an owner of this virtual UTXO, even if it's pre-confirmed, you don't need to ask permission to settle. You settle when you want, which of course it must happen in the next block. It cannot be faster than the next block. So in general, like if you want to get Bitcoin finality, you're still constrained by block time, but you're not constrained by block space, right? So literally it will be more people we are in this settlement process. Let's say 10,000 people want to settle in the next block. You don't know. You don't need to know them, right? Anyone who show up at the same time as you, they will actually make cheaper the settlement because more people, less cost, right? For that single Bitcoin transaction that basically anchors all of this VTXO and basically remove the trust assumption. And that's the other beauty thing, right? So pre-confirmation is not forever. You always can prune the state. You can always prune the trust assumption just by getting in the next block. So in many ways, just give more tooling and more room space for new application to actually leverage a very good trust assumption. And I think state chains are leveraging this. And in state chains, you're always pre-confirmed. That's I think just to give a very one-on-one comparison. So state chains like Spark, like you are always pre-confirmed, right? The only way to get Bitcoin finality is to exit, to withdraw your money. Here, you can actually get Bitcoin finality in a cheaper way, compressed way. So yeah, I think this is the main difference. Now, I think on our approach in the arcade, what we're doing, we've been researching a lot about trust execution environment, which are basically like custom hardware that basically not only execute things in a secure way, but most importantly, they create cryptographic attestation of every operation that happened in that server, right? Basically, which will be basically used by our own operator in arcade, not to be based the trust assumption, but actually to increase the trust assumption that already is pretty good, I think, for many use cases. But adding a T that basically every second, every user can check, is the code you're running genuine? Is the code you're running genuine? And you can do this basically every second, and you basically have a good assumption that in a way the operator is doing his best to actually claim this is the software. Even if I want, I can actually get the key out, because the key is not mine, has been generated inside the enclave when it's been run for the first time. I cannot access, because accessing means changing the code inside the enclave, and changing the code of enclave will basically send, imagining a broadcast notification to everybody to say, hey, I don't know why, but the operator is changing the code, so exit now. Right, so you don't even need to wait for actually a target double spend to happen. You just don't trust anymore. So why you're changing the code? What's the matter? So in a way, the trust execution environment allow us to have a more security in depth, and at the same time, it really relies on what major financial institutions are basically using day to day. So in a way, you're just compounding the trust effect over or something that's already been built for bigger stakes in a way.
Yes, I can see the breakthrough here because if we talk about DeFi, for instance, there at least 2017, 18 when we started, it was all about protocol risk. Now, if you settle on Bitcoin, you don't have protocol risk. But with ARK, you can have a unilateral exit. And I think a combination of these two is huge. Yes, I see a natural scaling of ARK, not payments, but integration with the Lightning Network first, then as I say, the financial operator integration and either payment processors or higher level of finance like DeFi, or also lending and trading. I can remember there are some, there were and still are some Lightning markets people can trade. But I think a combination of another exit without protocol risk is huge, and a lot can be built. And I now understand it's all about contract programmability. So the programmability, yes, of course, is smart contracts, but how do you think? Is what I said enough, or if it's correct?
Yep.
Of course. And do you see any other points where ARK outperforms the existing DeFi protocol?
Yeah, I mean, I think the biggest advantage, and I think that's not is not Arc or Arcade bringing it, is we are building on what we can call money, which is Bitcoin, right? So I think any other blockchain has a problem to okay, how I bridge Bitcoin on this chain, right? And so far, grab Bitcoin has a lot of usage, right? But at the same time, it's very tiny for the potential that Bitcoin has, and many Bitcoiner will rather keep in cold storage than to use other blockchain or other ecosystem, or maybe they will just go to a custodian because they say, well, it sounds to me bad that I need to wrap my Bitcoin and basically three signer, questionable signer, to then assess trustless smart contract on other blockchain. So I think this is a really untapped market, and I think the biggest advantage that I think we may have is the fact that we work on Bitcoin natively, right? There is no bridge. So there is no single honeypot where all the Bitcoin are locked. So if there is a bug, all the money will be basically unsafe. And bridge historically always been unsafe, right? And not only that, it's you're really creating a wallet garden. Every time you're creating a layer 2 that is another blockchain, not only you have another problem because you cannot scale a blockchain with another blockchain, right? So that's an oxymoron. But besides that, besides scalability itself, you are then forced to create a wallet garden, right? If you're a layer 2 that is a blockchain, you want exchange to actually withdraw directly to your blockchain, right? So in a way, you're not always touching the Bitcoin blockchain. So the beauty of this system where we virtualize the UTXO is well, we are closest to the UTXO as possible, and you can always dynamically go from the Bitcoin blockchain using a real Bitcoin transaction to virtual transaction back to Bitcoin in a way more seamless way. And lining, that's an example. Like beginning of this August, we went to Baltic Only Badger, which is an historical Bitcoin conference. So we were lucky with the organizer to basically swap all the point of sale of all the merchant, and we put arcade in the back, and everybody went there, paid their coffee, paid their lunch with with the Lightning wallet. Nobody knew it until the end of the conference, and then we said, "Hey guys, by the way, every payment," and we had, by the way, I guess more than thousands of payment, 100% of success, very fast. Merchants were telling us, "Oh wow, this year is even faster than the year before," right? In a way, so I think it's been a good test bed. But the interesting aspect there has been that's for me the example how you need programmability, because these we allowed for the first time to merchant to just have a key, right? They don't need to have a node, they don't need to have an inbound liquidity, they don't need to handle all this complexity. But at the same time, we were super interoperable seamlessly with Lightning right away. So people pay with their wallet, and we, of course, we use the guys at Bolts, which we are, partnering together, and they will be available when we launch. So in a way, we piggyback on their own operational excellence, right? So they have one of the best nodes, they're very well connected, and et cetera, et cetera. And at the same time, we use already the ecosystem that already has been there, right? So we're not asking you to create a wallet garden again. Hey, join my layer 2 blockchain, yalla, yalla, yalla. But like, hey, we're still like there. If you want to speak Lightning, we speak Lightning. You want to speak any other UTXO based protocol, it would be basically by design working in this, right? So, and I think that is possible because then when we think about payments, actually there is a lot of programmability behind, right? Because imagine you get a payment, maybe in Bitcoin, and then the merchant has to swap it to something maybe more stable for many reasons. So then you need again another swap, and then maybe, right? So you need a way to stabilize that balance without having actual, maybe a dependency to a centralized stablecoin, which means a dependency to a bank, which is kind of weird. No, we want to create this circular economy, but then we still rely on centralized issued stablecoin in a way for distribution because it's very pragmatic. They're accepted on every exchange. But at the same time, I think we should think bigger and really think about why, if Bitcoin is like new replacement for central banks, or in a way is a programmatic central bank, right? Because like the issuance of Bitcoin is all programmatic from the design. Why we're not creating the commercial banks? Why we're not creating the financial services, but built with Bitcoin, right? So is Bitcoin your backend? So I think that's how I see it, and that's how I think where we can really give an advantage to startup, neobank, or new fintech that, for me is a really a blue ocean. The moment like you can really use Bitcoin as a backend, you don't need to think about, oh, but this blockchain will be still here in 4 years. It's the best, most secure blockchain out there. Bitcoin is here to stay, is the best money. It's commodity, but it will become money. That's what we think as a Bitcoiners. So in a way, like you're safe. Like as a builder, you want to build on the best platform ever. It's just like you're constrained by the capabilities that you have or the infrastructure that you have right now. So I think those are very interesting use case for me in a way. Even though like behind the word payment, there is like many programmatic flow that you need to do, that you need to offer to startup to actually operate. But yeah, I think that's very very interesting.
Very, very clear. Go on, John.
Yeah. So just a question to help me understand, and maybe listeners that aren't so familiar with all the tech as you guys are. So what happens in a environment with high blockchain fees? So because you said earlier this conversation, because we're talking about real UTXOs, or yeah, that it's not for everyone. So I assume that the VTXO needs to be large enough to be able to like pay the fee for the on-chain fee. So does ARK work best in low environment fees, or and what happens if a small VTXO, like if you want to um, like get your money out and the fees are very high and the UTXO is not large enough to send over on chain. So, or am I now just misunderstanding it?
I think the interesting aspect to understand, and that's why we mention horizontal scalability, or in a way, like we're always trying to compare to what Amazon did with virtual machine in 2006. Like even the yearly server, right? So you had to buy your own server, you had to buy your own infrastructure. So imagine you are an e-commerce, you need to basically buy all of that and then do your application. But then with virtual machine, that's what happened, right? You have the impression that you have a server, right? You connect to it, and you can install all your stuff there. But actually, in the back, the operator is basically trying to optimize as much as possible. Where basically one physical server is basically being shared in a dynamic way across multiple customers, right? So that's like the horizontal scalability that, in a way, we are introducing. So ARK always consume one single Bitcoin transaction, regardless of the number of users, which is very different than Lightning. Lightning being a pair of channel, it means that every user has to have a channel, which means a Bitcoin transaction. So in a way, Lightning, more user, more on-chain pressure happens, right? Even a direct, indirect way, and now I'm not thinking about, I think, on a direct use case where user actually open their channel. But if it's not you, it will be your LSP, right? So Lightning Service Provider will basically do it for you, right? So in a way, in grand scheme of things, Lightning, right? More user, more on-chain footprint.
Yeah.
ARK actually always has a static on-chain footprint, regardless of the number of user. I would say that ARK with low user and low, I would say low frequency of payment is like kind of not great, right? Because like if you're like two people settling or three people settling, well, especially now with the mempool which is empty, it's like, okay, what's the point of this? I think the important aspect to understand is like, we don't need to settle every time. We just want to create this virtual mempool that is basically like a queue of like desired transaction flows that in eventually you settle at wall, right? Or at a single point in time. You don't settle every single activity happening happening there. So in a way, actually, the goal of, at least for us as implementation, is like, okay, how we can incentivize people to show up at the same time and try to aggregate as much as possible of people in a single Bitcoin transaction. So in a way, you have an incentive to have huge amount of participants. That's why I think just payments, because I think when we say payments as a Bitcoiner, we think about, okay, I receive a payment and then I want to own that UTXO. So many times we think about cold storage, right? Then yes, there is like circular economy about like, I want to pay my coffee in small setup. Maybe there are like communities around the world that all go around, pay with Lightning and it works. And that's amazing to witness, right? And that's what we want. But again, that's not enough, right? So that will not be enough to justify so much settlement, so much scaling that you need. That's why, instead having startup or companies that are in the end, they're like more aware of block space and block time, and they actually want to pre-purchase the right to settle in a timely manner, predictable way in the future. And that's where like I think is way more interesting to see the system to work, right? So not like directly, but like actually giving new type of companies to actually use the Bitcoin blockchain to settle, and then they can actually create better financial services or better financial flows for the user. So in that aspect, yes, that aspect like is really scale horizontally in that way. So you're not constrained by block space much.
Okay, yes, that makes a lot of sense. Thank you.
Just a few seconds to remind to our listeners that this podcast is sponsored by Bitvault, bitvault.sv. I invite you to head over to the site. It's the first Bitcoin wallet solution to solve the problems of physical attacks and hacks, thanks to our time delay over multi-sig technology. The beta is for free, coming out in October. I invite you to head over to the site and leave your email to get notified. Thank you very much.
Thanks. We understood the basics. Now I want to address the point of the startup. Let's talk about the project, because basically, yes, it cannot define a startup. You are building a protocol, no? So it's a bit different. And if you can help us to understand your business model, because that could help also us, the user, to see what we could build to program. I mean, if I have an idea or a startup has an idea, what's the timeline where this can be built on Ark? It's a very important point. Or what's the approach? Are you issuing Arcade to test integration for payment, which already spinning up? So layers, other wallet are using, and do you plan also to come up with a sort of SDK for contracts development, and if so, what languages? And how would you also? I'm curious if you can say it. How does Ark make money as a startup? And if you're going to seek important other funding rounds in the future, maybe it's a question which could be interesting.
Yeah, no, absolutely. I mean, in a way, like I would say, we are building open source, software in a way, and sure, in a way, like building a protocol is interesting, but in a way, it's also a constraint, right? Because like you're doing all the work to discover, to learn, to experiment, and then in a way better to be, to come later, right? So when everything is already fleshed out. But from the beginning, I think we always saw Arc just again as a technique, compression technique, and it's all about like what's your go-to-market and how you think you need this scale for. So I think even before like thinking about like, okay, let's build a product because it's cool, like, okay, but who actually needs Bitcoin and why we need to scale and why we need to expand the capability of Bitcoin, right? So I think those are the important questions that are shaping how we're going live. So I think in other way, also just building open source software and then like asking someone else to put their money and in a way put their own operation at risk. You have to show to them, right? It's very, and especially in the period we are. I think in 2018 we were very reckless with Lightning, right? So you just like literally, I remember like I lost money because like the major implementation wasn't supporting restore, which now look, thinking back, I said, well, I wouldn't never release a mainnet software with no restore, right? But at the time we really wanted something, right? So we were coming out of the block size wars and we really needed to believe in something, right? So, and then I think everybody with just a CLI, right, a command line interface were like just hacking around Lightning. I think now where we are deluded about that, because Lightning has been sold as the Visa Master of Bitcoin, but now it's basically maybe Swift of Bitcoin. And, as you imagine, it wasn't sexy pitch like it was, 6 years ago. So I think what we are doing, we're taking a longer route. So the idea is like not just to launch the protocol and say, oh guys, figure out, do something, but like we've been spending the last at least 12 months to think about, okay, how this and what problem can solve even before building it. And I think our approach will be, okay, we'll operate at the beginning, we will show the model works, we will show actually Bitcoin can actually capture part of markets or financial flows that right now are either custodial or, in other blockchain. And I think that will justify the volume and demand for native Bitcoin, right? And I think in other side, I think the interesting aspect will be, well, if we open up the liquidity provision to not only ourselves but third parties, I think that will be an interesting value proposition because it will be one of the very few ways where you can deploy your Bitcoin that are sitting maybe idle in cold storage in simple UTXO that basically provide liquidity to these batches, and in a way as one of the best way to collect fees on top of your liquidity, because you know that every Satoshi that is basically employed in a batch is being consuming liquidity, right? It's consuming and collecting fees. Whereas instead, if you open a channel, Lightning, you actually need to route payments, which you don't know if you're a good router, if you're in good middle of route that is very popular, and et cetera, et cetera. So here is like very different, like more demand of Bitcoin, it means also you're collecting fees. So I'm not saying, like the Ethereum people will call this staking, right? But like, I will say it's really just like putting your liquidity at work to collateralize basically these batches, so people have a simple pre-signed guarantee to actual UTXO, but you're doing in a more pragmatic and organized way, so then you can actually keep rolling liquidity over ad infinitum and basically collect fees and have a yield out of your liquidity being locked. So I think that's an angle where we've been. I think I did this presentation even before ARK was built on mainnet, right? So it was still like we were still like experimenting with covenants. But I remember I did this presentation called Banking on ARK, and I think what really struck to me is like for the first time we find a protocol to basically create a bank without a banker, right? I think that's the interesting aspect, and I think banks are here to stay, and I think everyone understood that like we are like against central banks, but in a way, bankers they will really much like use any other reserve asset. They do not stick to the system; they just like captured by the ecosystem in a way. So I think that's the interesting aspect. Not only like creating new application, and I think like we are product people, so we definitely have many ideas on things where we think arcade will be a good platform to build financial applications. So I think on a side we're going to build our own flagship products, and on the other side I think the aspect of commercialize the idea of like providing liquidity and collecting fees out of it. I think that's very interesting value proposition for many financial institutions.
Yes, yes. If I have to think about a use case which for sure will be in demand and will stay in demand until Bitcoin doesn't have volatility anymore, it's a stable coin. So we have seen that RGB is possible now to utilize stable coins, SDT, and how do arcade assets enable Bitcoin backed stable coins and financial products without breaches or wrapped tokens? And if you can expand on that, and if you think this could be an entry point for the financialization on Bitcoin by utilizing ARK, if you are seeking that, it could be after arcade, this could be maybe the win-win use case for you, although there are other implications, but
Yep. So I think again, being a Bitcoin native protocol means we can support any type of UTXO stuff, right? So if is even Omni come back, right? So the OG tokenization protocol that where Tether issued at the beginning, right? So it was issued on Omni on Bitcoin. We can support that, and we also made a demo of supporting Taproot asset, right? Just to show how we can really like leverage any type of on-chain asset protocol in the same way, RGB as well. I think, yeah, in a way, like we're also working in our own native asset specification for a couple of reasons. One, this is a more deep concept, but like if you really want to build very expressive contract in a UTXO model using Bitcoin script and extra, let's say, introspection of codes, you have a problem where you don't have state, right? So you need to store, for example, hey, Francesco, hold me this, Marco, hold me that. And, in Ethereum, it's very straightforward. You literally save state in this global virtual machine, and every node has to keep your state. Francesco owes me money, right? I think this is very straightforward for developer to reason about, but at the same time is one of the most dumb architecture to build a blockchain and to build smart contract. I think UTXO smart contract is interesting because like the state will basically be the creation of an output, and that output can be, let's say, an asset, right? And that asset can basically carry over state, and that asset, imagine, will be your own static asset. Let's say, imagine an owner asset that would allow you to withdraw, let's say, fund from a pool or like and do any other kind of application and create secondary market for UTXO smart contract without having the need to having a very expressive, virtual machine like Ethereum and et cetera, et cetera. So I think that will be very interesting. Our stance is like whatever will gain traction on Bitcoin, I think it will be basically not even something we need to do, right? So like besides doing like a very generalizable, flexible UTXO and virtual UTXO system, then really anyone can bridge anything and do whatever they want. They have a full Bitcoin script interpreter. They have also have more opcodes that we are adding in our trust execution environment, et cetera, et cetera. So in a way, like it will just be, okay, you do what you want, right? So yeah, I think for sure stablecoin are like pragmatic, I would say. As I said before, I think, centralized stablecoin, I don't think should be where, as a Bitcoiner, we should focus. We need to think about way to, give the intuition to user you have a stable, or like you can mitigate the volatility of Bitcoin for many use cases. Commerce is one of the first need or requirement for that. But you don't need to have treasury back in those stablecoin. You can have Bitcoin in the back and try to, in a way, capturing the demand of long and short. You can actually create some of those systems that we call synthetic assets, right? So they are assets that track something external. So with a combination of over-collateralization and a combination of oracles, you can actually create pretty good value proposition and structured product that can be delivered as an asset, but actually they're actually increasing the demand for Bitcoin in the back.
Yes, it's very clear. So another possibility. I don't know, Gianno, you have another question or?
Yeah, so I was wondering if there are already major like Bitcoin wallets and services reaching out to integrate ARK, and I don't know what are they looking for to build on it.
Yep. So we have been having conversation basically with all the most famous wallet for a while. So I think it's as everything when there is new curiosity, new protocols, it makes sense to explore. So I think again it would be pretty easy. I would say for any Bitcoin wallet, especially on-chain wallet already, not only to integrate the basics, but most importantly also to have some use cases. So think about peer-to-peer marketplace already that exist, or peer-to-peer lending use cases that already exist. And for example, like a friend of mine, Shazam, running Lava. Lava is like this really nice, sleek mobile application that allow you to borrow against your Bitcoin. So you lock your Bitcoin in a DLC, right? So from the sake of the audience, you can think about as an escrow with an oracle. So you lock your money there, so your Bitcoin are there, and then the idea is like you can borrow against it, and then you can repay back, or you will get liquidated if you don't top up enough collateral if the price of Bitcoin goes down. So I think that use case is for sure right now doesn't require arcade. You can already do it on Bitcoin, but the thing is that he always say to me is like, well, if tomorrow we need to process thousands of loans per second, like basic banks do, right? We won't scale, right? So in a way, like all this predictable. That's why I go back to like many businesses. What they want is predictability, right? And they're okay with trust minimization. They're okay with like many trust trade-off. Just what they want is like remove as much as possible counterparty risk, and at the same time having a predictable fee for their own operation. And I think that's an interesting use case where I think will be very interesting, which is also microloans and the possibility to basically like really have consumer credit again built with Bitcoin as a backend, right? So you're not like leveraging some custodian or something like that. And I think that will be very interesting. For me, peer-to-peer trading would be very interesting, right? So many times I want to off-ramp my Bitcoin, right? Because like I get my salary in Bitcoin, I live with Bitcoin for all my last basically 10 years, right? So many times I use Bitcoin every day, but I need to off-ramp, right? So to fiat, to anything that, and I don't want to use centralized places because I need to put my custody, and there's a lot of KYC ML burden, especially if you're a traveler. You never have a good proof of address, right? Like normal people. So in a way, having peer-to-peer trading places for me is a very interesting use case. So I think what will definitely be very interesting to explore lending and trading for sure.
Yeah, that sounds very yeah, that makes a lot of sense. And was Lava also at BTC Prague with a stand, or?
Oh no, I was just mentioning just to say that I'm a user, I'm a client, customer, and I use it, and I think that's a very good use case, which it can definitely like with the same technology. That's what I'm saying. Like you don't need to recreate the wheel, although I think lending pools like Aave or Morpho have better rates for obvious reason, right? So I think pooling really makes more efficient the allocation of lending capital. But at the same time, I think it's still very valuable, the peer-to-peer lending use case, and Lava is demonstrating it. And I think for them to upgrade to build, an arcade on a virtual UTXO manner, it won't be, oh, now I need to change technology. Now I need to rewrite everything in Solidity to deploy on Ethereum, right? So you can stay using Bitcoin keys, Bitcoin wallets, Bitcoin technology, and just like upgrade it in a way. So I would say it's like a 20% extra overhead, but it's not like, oh yeah, it's a completely different architecture in a way.
Yeah, that's a great feature. Yeah, thank you.
Yes, I can see that that product market fit, which should be reached for a normal startup, is quite a bit different for a protocol startup like ARK, because you are allowing basically a lot of use cases, from financial to smart contracts to software on top of Bitcoin. And you will find out which one catches first, because it's based on the need of the users more than of what you are seeking. So it's like the product market fit is looking to find your use case. It's a bit at the opposite. So I can understand now why it's the proposition, which apparently looks like so broad. It's not because it's that broad that is not focused, but it is because the market has to find the new technology, the use case, and over time that will become particularly clear. Of course, a lot also depends on what you make available, but also no, maybe I don't know if how many people you have to that. Yeah, go ahead.
No, in a way, like we're really looking what like so-called DeFi is going in Ethereum, right? So, and in the end, there are like three use cases: swap, swap, lend, and maybe margin leverage, right? You don't like at the beginning the pitch of Ethereum was like, oh yeah, we're gonna do Uber on the blockchain, right? So, but no, that's has been always like silly in a way. So in a way, the use cases that really works is like, okay, around like how we make money programmable. So these are like the major use cases, right? That are basically consistent, and we are not looking anything else beyond that. And mostly the most important thing is like all of these use cases require money. And in a way, in Ethereum, money is stablecoin. So like in a way, like you're just having this like crypto asset that is used for gas, but actually it doesn't have really value because it's not money. It cannot be money, right? And that's why I'm very bullish on what we are doing, because like, well, we are building on what is money, right? What we think is money and will be. It's just a matter of creating, the capability and the infrastructure on top of it. And yeah, you don't need to be crazy. We don't need to do the Uber on the blockchain pitch, kind of just focusing on like very basic primitive that in the end are composable each another. So, companies, startups, and, people can actually build composing them and actually create, a very good value proposition for the users.
No, yes, I understand. I agree. I agree, because Ethereum is a downfall, has been like that, changing narrative many times, and now not too many VCs bugging anymore. They are just dumping tokens. So it's a great entry point on this side. It will also a lot depend how quickly the SDKs to build these tools, these products for people who want to shift from Ethereum to ARK, it can be available. Do you think that the next year we could see something more to enable all of these use cases?
No, I think we're trying our best to to work with partners so that we can show, don't tell, in a way like you can actually try application, you can see, and we don't need to be in the end of user, but it will be our the companies actually go to market and having a user facing. Because they are the domain expert, right? So, and we want to give them the infrastructure to be the best at their job. So I hope, and we already claim and mentioned that we want to at least launch a public beta by this quarter. And the idea would be to at least have these basics. I think, you already saw in action, who was at the Baltic Badger conference already saw in action the atomic swap between Lightning and a VTXO. So I think that will be a very strong value proposition, because from the launch we are basically already connected with whatever Lightning is already connected. So you can really like deposit to Coinbase, Binance, Bitfinex from day one, right? So I think that's a good way to start, because you have connectivity. And very interesting about escrow as a use case, I remind. So we're working there with a partner, and as well lending. I think that's so interesting, and microloans especially are very interesting value proposition. So we're trying to have this like try to support them with white glove, experience. Try to be very careful of their needs, and try to go to market together.
Yes, and the timing is great, because we are in a bull market, and it is likely going to continue. So that helps being more and more people more interested. Also, newcomers who might need trustless protocol with scalable like ARK is. Well, John, we have a question. Otherwise, we can end the space and stop.
Yeah, so no, I don't have any questions. So thank you, Tiero, for your time. I really appreciate it.
Thank you so much. Thank you for
Thank
having
you.
me.
Thank you. I hope the was educational enough for the listener. For sure, it was for me. So I hope it will be for the others. Thank you all other attendees, and it is gonna be it's recorded, so you will find on our channel. And yeah, let's have a great continuation of the week. Have a nice day. Goodbye.
Bye, guys.